Hello everyone, and a very warm welcome to the first lesson of our course, The Digital Gold Rush, a 9-lesson primer on virtual currencies. It's a pleasure to be with you on this exciting journey. Before we dive in, allow me to introduce myself. I'm teacher Juguan. Over the past decade, I've navigated the complexities of the financial markets from several key positions. I served as the chief quantitative analyst at Gushi Asset Management Company, where we used complex mathematical models to identify market opportunities and risks. I later directed research at the Shangdao Yashan Financial Research Institute and led the investment strategy group at Dongmu Capital, formulating macro and tactical asset allocation plans. Currently, I am the chief strategy analyst at Qiuntang Education, focusing on financial literacy. I hold a Master of Finance from a prestigious double first-class university in China, and I am a seasoned investment practitioner with over 10 years of hands-on experience in the secondary markets. My journey into cryptocurrency began several years ago, and I now specialize in this asset class as a professional investor, covering the entire market. Throughout my career, I've developed and adhered to a core investment philosophy, which I call Shengqi plus Heli, which translates to taking advantage of the situation plus seeking synergy equals successful transactions. This means we don't fight the market's tide. Instead, we seek to understand the powerful, underlying trends, the situation, and then we act in a rational and synergistic way to align our strategies with that momentum. This philosophy will be the golden thread running through all 9 lessons of this course, helping you to make calm and calculated decisions in the often volatile world of crypto. Today, in our first session, we will lay the foundational understanding for everything that follows. We are going to explore why virtual currencies represent what I call a global gold opportunity. Let's begin with a fundamental concept. Virtual currency, and specifically Bitcoin, is not merely a technological innovation. It is profoundly a product of finance and politics. Think back to the year 2008. The global financial system was in cardiac arrest. Legendary investment banks were collapsing. Governments were orchestrating massive bailouts with taxpayers' money, and the trust that forms the very bedrock of our financial system was shattered. People around the world questioned the centralized authorities, the governments and central banks, that had allowed this to happen. It was in this climate of distrust and failure that a pseudonymous individual or group known as Satoshi Nakamoto released the Bitcoin white paper. This was not a coincidence. Bitcoin was conceived as a direct and elegant solution to this crisis of trust. It proposed a system for electronic transactions that did not rely on trust in a third party, like a bank. Instead, it relied on cryptographic proof and a decentralized network. For the first time in human history, we had a form of money that was truly borderless, open to everyone, and whose rules were not dictated by a central committee, but were written into immutable code. This was a revolutionary idea, as much a political statement as it was a financial one. Let's look at the core features that make this possible, as outlined in our slides. Bitcoin operates by selling and trading in a purely virtual online environment. It is decentralized, meaning no single entity controls it. Its supply is mathematically capped. It will be limited to only 21 million coins. This is a stark contrast to traditional fiat currencies like the US dollar or the euro, which can be printed in unlimited quantities by central banks, a process known as quantitative easing, which can devalue the currency in your pocket. Furthermore, its issuance and trading are highly transparent. Every single transaction is recorded on a public ledger, visible to all, yet secure and tamper-proof. It operates outside the direct control of governments and central banks. This doesn't mean it exists to evade the law, but rather to provide an alternative, a choice of global, neutral monetary network. Now, fast forward to a hypothetical but highly plausible future, March 6, 2025. Our slide illustrates a pivotal moment. Imagine the headline: the United States, the world's largest economy, formally establishes a strategic Bitcoin reserve. Let's unpack this scenario. David Sachs, the head of cryptocurrency affairs, announces that President Trump has signed an executive order. The US government will hold its approximately 200,000 bitcoins, not as a speculative asset to be traded, but as a long-term store of value, much like it holds gold in Fort Knox. They declare they will not sell these coins. Additionally, they create a U.S. digital asset reserve pool that includes other seized digital assets. This is monumental. Why? This single move would accomplish several things. 1. Legitimization. It sends an undeniable signal to every other nation, every institutional investor, and every individual on the planet that Bitcoin is a serious strategic asset class. 2. Scarcity acceleration. The U.S. government, by locking up 200,000 coins and declaring it won't sell, effectively removes a significant portion of the available supply from the market. Basic economics tells us that when demand for a scarce asset increases and the supply is fixed or shrinking, the price is fundamentally supported. 3. The digital gold narrative. This action cements Bitcoin's role as digital gold. For centuries, nations have held gold reserves to protect their wealth against global uncertainty and the devaluation of paper currencies. By creating a Bitcoin reserve, the US is acknowledging that in the digital age, Bitcoin serves a similar, if not more efficient, purpose. Now, this global opportunity isn't built on thin air. It's powered by a profound technological rise. To be a savvy investor, you must understand the basics of the engine under the hood. The cornerstone technology is the blockchain. Think of it not as a cryptic term, but as a super version shared by all. It's a digital ledger. But unlike a bank's private ledger, this one is distributed across thousands of computers worldwide. Every participant has a copy. When a new transaction occurs, it's grouped into a block and broadcast to the network. The network participants, called miners, then validate this block. Once validated, it is chained to the previous block, creating a continuous, unbreakable chain of records. Hence, the blockchain. This makes the system decentralized. No single point of failure. Transparent. Anyone can audit the transaction history. Tamper-proof. Altering a single record would require changing all subsequent blocks and controlling over 51% of the network's computing power. Practically impossible feat. This entire system is secured by advanced cryptography, which protects the identity of users and ensures the integrity of transactions. It's what makes the system trustworthy without a central authority. Let's use some vivid metaphors from our slide to make these concepts stick. Bitcoin is digital gold. It's scarce, durable, and requires effort mining to obtain. It's a store of value in the digital realm. Mining is a math contest. Miners compete to solve a complex mathematical puzzle. The winner gets the right to add the new block to the blockchain and is rewarded with new bitcoins. This is how new coins are issued fairly and how the network is secured. A miner is a contestant plus notary. They are not just creating new coins, they are also verifying and certifying the validity of everyone else's transactions, acting as the trust mechanism for the entire network. A transaction is a call-out to the entire network when you send Bitcoin. You're not sending a file, you are announcing to the entire P2P network, I am transferring X Bitcoin from my address to this other address. The network then confirms and permanently records this announcement. Now, let's talk about the market itself. Our slide shows a chart of the total cryptocurrency market capitalization over the years. You can see it's not a smooth upward line. It's a journey marked by explosive growth periods, what we call crazy rises, followed by sharp corrections. This volatility is a double-edged sword. It presents enormous opportunities but also carries significant risk. This is where my philosophy of Healy rationality and seeking synergy becomes critical. The temptation during these crazy rises is to follow the herd, to buy out of fear of missing out. However, the successful investor learns to understand the cycles, to analyze the underlying value, and to make decisions based on logic and a solid strategy, not on emotion. the massive growth you see on that chart, from virtually zero to a multi-trillion-dollar asset class, is not random. It is the direct result of the fundamental properties we just discussed: scarcity, decentralization, utility, and growing global adoption. The crazy rises are the market slowly, then suddenly, pricing in this new technological and financial paradigm. So, to bring it all together in this first lesson, we've seen that virtual currency was born from a crisis of trust in the traditional financial system. We've understood its core properties of limited supply, transparency, and decentralization. We've explored a future where it is recognized as a strategic national asset, much like gold. And we've peeked under the hood at the revolutionary blockchain technology that makes it all possible. This convergence of finance, politics, and technology is what creates this unparalleled global gold opportunity for those who are prepared. We are still in the early innings of this transformation. In our next lesson, we will get more practical. We will demystify the process of how to quickly get started as a beginner. We will walk you through choosing your first cryptocurrency, setting up an exchange account, and understanding the essential tools for safe trading. This will be your hands-on guide to entering the market with confidence. Special note, thank you for your attention. Prior to accessing or relying on the information provided by us, please carefully review the following disclaimer. 1. The content of our courses is intended solely for general, informational, and educational purposes and does not constitute professional financial advocacy. We are not registered financial advisors, nor do we hold any professional financial services license. All views, opinions, and recommendations expressed in our materials are those of the individual authors and do not necessarily reflect any organizational stance. 2. While our courses may include information related to investing, personal finance, management, and other financial topics, such content should not be construed as professional advice. You are strongly advised to consult a qualified financial professional such as a licensed financial advisor or investment counselor before making any financial decisions. 3. We make reasonable efforts to ensure the accuracy and reliability of the information presented. However, we do not guarantee the completeness, timeliness, or correctness of the content. As such, we shall not be held liable for any direct or indirect losses or damages resulting from the use of or reliance on the information provided. 4. Our courses may contain hyperlinks to third-party websites or references to third-party products. These links and references are provided solely for convenience and do not imply endorsement. We assume no responsibility for the content, products, or services offered by third parties. Nor do we warrant the accuracy, completeness, or reliability of any linked external resources. 5. No information contained in our courses shall be as an express or implied warranty or guarantee to any individual or entity. Users assume full responsibility for any actions taken based on the material presented. Thank you for your time and attention. I encourage you to review this material and jot down any questions. I am here to guide you. Remember, in this new digital gold rush, the most valuable tool you have is knowledge. I look forward to seeing you in the next lesson.